What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now in today's video, we're going to go over the stock offering that NIO just finished completing and how this could affect NIO going forward and what you guys should maybe keep in mind if you guys are invested in NIO or if you're planning on investing in NIO at some point in the future. But before we actually jump into the video, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it, and it really does help out the channel and it lets me know that you guys enjoy these video updates every day. So again, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it. But with that out of the way, to kind of give you guys some context of where NIO is trading right now, they're trading right around $44 to $45. And they're really not up or down too much on the day. They're up right around 0.2%. And for the most part, they've been pretty flat most of the day. Now they did open a bit higher during pre-market and right around market open. But then within the first hour or so of the market being open, NIO pulled back and now they're kind of leveling off right around $45. Now in the 1 week, NIO is actually up almost 6%. And you can see that most of the week they've actually been pretty green except the first 2 days or so. And this is actually a good thing to see because we know NIO has been going down pretty much for the last month or so. And it's been a pretty consistent red trend downwards. Because if you actually look here on the 1 month, you can see most of the month has been down. And even though they are up 1% on the month, the last 3 weeks or so has been a consistent downwards trend. Now there's been a few green days here and there, but for the most part, you can see they've been negative all month. Now there's not really one specific reason as to why NIO has been down all month. There's been a compiled list of things that have continually chipped away at NIO's share price in the last few weeks. But to mention a few of the major things that really dented NIO's share price, a lot of it was due in part to worries about Chinese stocks being delisted. Now we know that happened right around the end of November, and that went into the first couple days of December. And so that's part of what really started this momentum of NIO going down. Then we know there was also news about XPeng and Li Auto being shorted, and also Kandi Technologies. Now, if you guys don't know what Kandi is, they're another EV company over in China, and they're a bit smaller than these other companies that we know of. They're not quite as big, and they're trading right around $8 or so. But to see a company like Kandi trading right around $8, and they get shorted by a big company, and it affects all these other EV companies as well, like NIO, Li Auto, and XPeng, it's very interesting to see because we already know all these Chinese EV companies follow a very similar trend. But I think it's odd to see such a small company affect these other companies as well. Like we know that a big company like Tesla or one of the equivalents like XPeng could affect NIO, and obviously Tesla affects NIO. But to see such a small company like Kandi is actually kind of interesting to see that they have such a great effect on a company like NIO. Because as I'm sure most of you guys know, recently NIO actually surpassed GM in terms of what their company is worth. Now I don't know if this holds true as of right now because NIO's share price has pulled back quite a bit, but at least at one point a few weeks ago, NIO was worth more than GM, and they were consistently climbing up that list of top automakers in the world. But aside from NIO surpassing GM in terms of what their company is worth, there was also other negative news in the space that kind of affected NIO and continued this downward trend the last week or so. And a lot of that had to do with these other companies doing stock offerings. Now we know that NIO just completed their stock offering as of yesterday, and they're also finalizing some extra shares for their underwriters today. So after today, everything will be wrapped up for the secondary stock offering that NIO is doing. But these other EV companies that we know of like Li Auto, XPeng, and Tesla also did stock offerings to raise some capital. NIO ended up being the last one to jump on this trend to raise capital. And I don't think that's a bad thing because they're doing it to keep up with their competition and keep themselves ahead of XPeng and Li Auto. Now obviously at some point they want to catch up to Tesla and they want to surpass them at some point in the future. But the point of raising this capital, I don't think it was just because they wanted to raise capital. I think they're doing it because these other companies are doing it, and they likely would have fallen behind. Or if they wouldn't have fallen behind, these other companies like Li Auto and XPeng would have had a bigger advantage, and they would have had an easier time catching up to where NIO is. Now NIO hasn't been short on cash or anything. Like I said, they're raising this capital because they're taking advantage of investor interest, and they're doing it because of all the hype around EVs right now. but they actually raised around $3 billion. And we're going to go over why this is and what their plans are to use this $3 billion for in the future. Now, NIO actually said that their planned stock offering has closed and that their banks opted to buy extra shares over and above the original amount planned. Now, we know that originally NIO was offering 60 million new American depository shares, but then this actually got bumped up to 68 million. And then NIO's underwriters, Morgan Stanley and China International Capital Corporation, also had the option to buy an additional 10.2 million shares at the same price. But before their underwriters are able to go in and buy shares, as of NIO's offering of 68 million shares, which was finalized on Wednesday at a price of $39 per share, before fees, NIO was able to raise $2.65 billion. Now, when you take into account this $2.65 billion, and you add on top of that the underwriters Morgan Stanley and China International, when you add in their extra shares that they're willing to buy, this brings the total up to around $3 billion. Now, with this $3 billion raised, we know that NIO joined these other companies, these other EV companies like Tesla, Li Auto, and XPeng, who actually finalized their offerings within the last week or two, because Tesla actually raised $5 billion last week, Li Auto raised $1.4 billion earlier this month, and XPeng raised almost $2.5 billion in an offering that closed last week. Now, with this $3 billion raised, obviously NIO has raised more than XPeng and Li Auto, not quite as much as Tesla, but NIO also isn't short on cash right now, but we also know that they're not profitable yet, and hopefully this raised capital can help NIO in the future and can help them become more profitable much sooner than they would have originally anticipated. Because if you guys look at different analyst ratings and different analyst predictions, they say that NIO likely won't become profitable until 2022 or 2023. So if they can put this $3 billion towards different facilities and they can produce more vehicles in a shorter amount of time, theoretically that should make NIO profitable much sooner. But they actually said last week that their plans to use these proceeds are going to be used towards developing new vehicles and also continuing research and development of their autonomous vehicle technologies. They also touched on the fact that they want to expand their sales and service network, which again should help NIO become profitable much sooner. Because if they're putting out more vehicles and they can mass produce more vehicles, they should be able to leverage that, as well as leveraging their partnership with JAC Motors, who is their current manufacturer of their vehicles. And so if they can create more facilities on top of leveraging that partnership, we should see NIO hitting very high delivery numbers within the next year or two, on top of all the demand that there is for vehicles over in China, because obviously China is the biggest market there is in the world. They have something like 1.5 billion people in China. And so to raise this much capital, around $3 billion, at a time like this where EV stocks are on the rise, and where there's so much hype around EV stocks and EV companies, this was likely one of the better times when NIO could have done a secondary stock offering. Now, I'm sure most of you guys know that recently NIO did another stock offering, which was in August, and they sold right around 88.5 million shares. And those shares were sold for about $17 a share. Now, I think when NIO did that stock offering, they weren't planning on their share price rising so drastically. But we know that there's been a lot of hype around EV stocks in just the last couple months. And so because of this, NIO and these other EV companies' share prices have pretty much gone to the moon. And some of these companies have even 5 and 6x'd in just the last few months. But what does all this extra cash mean for NIO going forward? And what does it mean for you guys if you're invested in NIO? Well, one of the major things, like I mentioned, is that NIO should hopefully become profitable much sooner. Now, if you guys didn't see my most recent video on NIO, I actually mentioned when I think NIO could 2 to 3x their share price. And you guys would probably be surprised to see that it's much sooner than a lot of people are anticipating. So if you guys haven't seen that video, make sure you go check that out, because I explained based on their revenue and their delivery numbers when NIO could likely double to triple their share price. But in terms of this capital that they've raised, you guys have to realize that $3 billion is a lot of money raised for a company like NIO, and they can really leverage that money and use it amongst so many parts of their business to increase the overall size and scalability of their business. But in order for them to be a sustainable business, they need to be in the profit margin. And obviously they are working towards that. But with a company that's not yet profitable, they could drop and become bankrupt at any time. But that's where this $3 billion raised capital comes in. If we have another economic downtrend, With $3 billion on hand, obviously NIO is going to be more set than other companies, and they're going to be able to face another economic downtrend with $3 billion of cash on hand. But in the long term, I think this raised capital, and even in the short term, it really should help boost up NIO. Now you can just look at NIO's share price today, and they kind of spiked up early in the trading day because of this news that their stock offering was completed. Now I wouldn't be surprised to see the same thing tomorrow after their underwriters finalize those extra 10 billion shares, because a lot of investors are seeing that NIO is going to really leverage this money and they're going to put it to good use to really buff up their company. And even if your shares are slightly diluted right now, and your slice of the pie of NIO temporarily drops in value, long term the pie is going to increase in value, and that pie being NIO. So even if shares take a slight hit right now, long term this money is really going to be put into effect, and we should see NIO's share price recover really nicely because of this raised capital. Now, for those of you who made it this far into the video, I want to hear what your guys' thoughts are about the stock offering that NIO just completed, and whether you guys think this was a good time to do this offering, or if you think NIO should have continued waiting for their share price to rise even more. Now, as of right now, and looking at how the market has been moving, I think this was a good time for NIO to do this offering. Because with all this hype in the market right now, you never know when these stocks could see a downtrend and trend down for an extended period of time. So as of right now, I think this was one of the better times when NIO could have done a secondary stock offering. So again, let me know down in the comments what you guys think, and if you think NIO did it at the right time, or if they should have continued waiting for their share price to rise even more. Also, I just wanted to mention that I actually set up a Discord server, so if you guys want to sign up for that, you guys can sign up using the link in the description. And I am still in the process of setting everything up, so don't expect anything too amazing right now. But again, if you guys want to join that, it's totally free and you guys can sign up using the link in the description. Lastly, if you guys haven't signed up for Webull, you guys can use my link in the description. And when you sign up and deposit $100, you'll get 4 free stocks. So make sure you guys take advantage of this offer before it expires. Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.